everybody. I'm Katie Evans with the Living 48 Real Estate Team, and we are super excited to have you back for another one of our Mortgage Minute segments. And of course, you can see that I have got one of my favorite lenders. He says the favorite lender.
It's a no-brainer, right?
Not going to argue with him. But Marc Trejo is here with me from Sun American Mortgage, and we're super excited to have Marc back. So
thanks Katie.
Marc.
Thank you.
So today what we, Marc and I discussed something that we want to talk about. You know, I asked Marc, like, what are one of the questions that you get all the time? Like what's most common asked questions? And he said to me, well, it has to do about two things. It's either, you know, your down payment and your closing costs, or it's about your monthly payment. And I thought, well, we talk about down payment and closing costs a lot, and you can go back and watch other Mortgage Minute videos where we talk about those. And so I thought, well, that we don't really talk about how to calculate your monthly payment, because I thought, you know, I've had this experience when I was younger and I was trying to figure out, you know, how much I could afford and that kind of stuff. And you go online and you find a mortgage calculator and you plug it in and they're like, yeah, your house payment will be like $800. And I'm like, really? And they're missing some pieces. And so Marc, I wanted to have you speak to that today. Like, what are the two different kinds of kind of calculations that they use, and what goes into those, and why is one of them $800 and the other one $1,200?
Sure. And so when you get down, when you hear mortgage payment, it's like closing costs. It's a simple term that people say, what's your payment? What's my payment? But there's so many different factors that need to be considered related to, are you going to have an escrow account? You know, do you have 20% to put down, or do you have 20% equity to where you don't need mortgage insurance? Those types of things. And so your payment breaks down into 4 or 5 different things, depending on your escrow account, depending on mortgage insurance. And so it's principal, it's interest, it's home insurance, property taxes, and then mortgage insurance. And so for an FHA buyer, they're always going to have mortgage insurance involved. And so it's always 5, you know, that loan is a government run loan, and that payment requires mortgage insurance. And so in order to get rid of mortgage insurance, if you're in an FHA loan, you need to get out of the FHA loan into a conventional loan, and that impacts credit score and all that kind of stuff. So let's assume you're going to do an escrow account. What an escrow account is all of us have the joy of paying property taxes and home insurance, you know, for theft and fire and flood and all that kind of stuff. Each month with your mortgage payment, you pay 1/12 of what those premiums are into kind of, I refer to it basically as a savings account with your lender. And then when those premiums come due, in Arizona, property taxes is twice a year, and then insurance is once a year. When those premiums come due, your lender makes that payment for you.
Right.
So that's why once a year we all get our escrow analysis from our lender, and they tell us if our payment's going to go up or down. It's based on, did our home insurance premium go up or down, and did our property taxes go up or down? That's when your payment changes. I get a few calls every now and then saying, why did my payment change? We're in a 30-year fixed.
Yeah.
It's because your escrow account changed.
Yeah. And usually it's the property taxes.
Right. A dramatic increase or decrease would be revolved around usually your insurance, unless you had a big claim. Yeah, you're right. It wouldn't change much.
Yeah.
Your principal and interest portion, that amount stays the same. That's the loan itself. That's the cost, which is the interest rate, and that is the principal balance being paid down. And so those two amounts are tied together. That amount will never change. Like, for example, let's say your principal and interest portion is $1,000. For that 30 years, as long as you're in that loan, the principal and interest will always be $1,000. The only thing that will change is how much goes to principal and how much goes to the interest. You know, in the front, more is going to go to interest than principal. Towards the back, more will go to principal than interest.
Right.
And so those pieces to your payment are important to understand. I have my principal, I have my interest, those are tied together. I have my taxes, my insurance. Those are a fee that are paid to third parties on behalf of me from the lender.
Yeah.
Specifically related to an escrow account, most lenders these days will ding you a little bit on rate if you don't have one. If a lot of people don't want to do an escrow account, they want to pay it on their own, you'll probably pay an eighth higher in rate, because the lender wants that comfort that another lien's not going to get put on. They want to control that.
Yeah, absolutely. Absolutely. Oh my gosh. So really what you're kind of explaining to us here is that when we go onto those online mortgage calculators, because they just don't have the rest of the information, there's no way for them to get the rest of the information. The majority of them are just going to tell us what our principal and interest payments are. And that's why it's always a lower number than kind of what it ends up being in the future.
It's very possible. You do need to be careful. I mean, there's plenty of mortgage calculators out there that will let you do the whole thing and let you estimate what home insurance is and let you estimate what property taxes are. And those are a little bit more difficult, because those are based on the home itself and you're truly estimating.
Yeah.
But you do want to pay attention to that when you're finding a calculator. Is this calculator just giving me principal and interest, or is this calculator giving me all four aspects of what I'm looking for?
Yeah, absolutely. I think that is such great advice. Great advice. All right, you guys. So if you have any questions about what you personally could qualify for, that would include all of those other numbers besides just the principal and interest, then it is such a great idea to talk with someone like Mark, so that he can kind of look at your credit score, look at where you're at, and then have that discussion with you. Because what we're finding is a lot of people are actually qualified to purchase more than what they're comfortable with. So just because a lender will qualify you for, let's say, $400,000, that may not be a monthly payment that you're comfortable with. So have those discussions with your lender or with Mark, and make sure that they understand the monthly expenditure that you're comfortable with, and that might not equal the max amount that they approved you for. So keep that in mind as you're kind of running your budgets, looking forward, trying to make plans on purchasing homes and that kind of thing for the future. I just think that that's an important discussion to have before you get there, because I actually instruct all of my clients that no, I'm not going to take you out to look at houses. We're not even going to set up your portal until you've had that conversation together, if it's a married couple, and with your lender, because there is nothing worse, promise you, nothing worse than starting to look at like $500,000 houses and then determining that you're not comfortable with anything over a $400,000 house. There is a difference in those houses. And once I've shown you the $500,000 home, nothing in the 400,000 is going to make you happy. So we like to make sure that we get all of that done up front, so that we're showing you things that you are really happy with, and you're comfortable with it. And you know, if you buy this house or if you make this investment, that you're where you want to be, that's been decided up front. So Mark, I really, really appreciate you giving us a little bit more education on all of that and how the best ways to figure some of that out in advance are. So Mark, if anybody has any further questions for you, or they want to talk to you about getting pre-qualified to purchase a home, what's the best way they can get in touch with you?
They can find me on the phone book under Katie's favorite lender. No, my cell phone will be best, 602-743-4885, and they can call or text anytime.
Awesome.
So love to help.
And if you guys forget and you didn't write that down fast enough, or you don't want to go take the time to look it up, probably you will not find it under Katie's lender, because I don't think that they have that category in the phone book, but we might get them to add it. So you guys can always go find Mark on our website, which is www.living48realestate.com, and then go all the way over to the other category at the top, drop down to our preferred vendors. And under there, you'll find a lender category, and you will absolutely be able to find all of Mark's information there as well. So we invite you to go there, check out all the other resources that we have. You can search for homes there. You can see what your current property value might be in today's market on that website as well. And there's a lot of other great information for you. So Mark, thank you as always for sharing your wealth of knowledge with us and better educating us to be better consumers in the marketplace today. Really, really appreciate all you share with us.
Thank you. I'm happy to help anytime.
Awesome. Okay, everybody. Well, go out there, be safe, stay healthy, and we will catch you on our next Mortgage Minute. Have a great day. Bye.
Bye.